All right, so today I'm going to explain briefly what deferred revenue means, how does it impact your top line, or top line is the revenue, and we will see some examples from Google and Facebook or Meta financial statements. So before I get started and before I explain what deferred revenue means, first you need to understand a few basic concepts in accounting. And as Warren Buffett says, accounting is the language of business. So if you would like to understand your business, you need to learn accounting. And so what we basically have in each balance sheet is we have assets, all right? We have abilities, and we have here what's left, equity, all right? So if, for example, we have $100,000 in our bank account, all right? And let's say we purchased a car for $50,000, $25,000 we paid in cash, all right? So we left with 75K in cash. We have a loan under liability of 25K. So this is the change that we will see in our balance sheet, all right? And we will have, this is bank, we will have an additional line in our balance sheet for a car of 50,000, all right? And the equity um, hasn't changed, so it's basically 100,000. So the way to get the equity is to subtract the liabilities from the assets. So if we have here $75,000 left in cash, and then we have a new asset, which is the car that we just bought, um, that worth $50,000. So altogether here um, we have, sorry, $125,000 under the assets, minus the liability that we have here, minus the 25, will leave us with 100,000 in equity, which is our net worth, if we can say that. All right. So this is what left if we will decide to, sell all of our assets, pay all of our liability. This is what we left with to the shareholders. All right, $100,000. Now, let's understand how deferred revenue actually impacts the financial statements. All right, and your ability to recognize revenue. So let's assume that you are a software company that sells subscription, and let's say that you're selling annual subscription, all right? And for example, let's assume that let's say in October 31st, or sorry, October 1st, 2024, you sold $120,000 of subscription to a client, all right? And it's on an annual basis. So what does it mean is that you in 2024 you will be able to recognize only 30,000 out of this 120, because the service period is from October 1st, 2024 until September 30th, 2025, right? It's 12 months. So in 2024, we can recognize only 3 months out of the 12, and the rest of it, the $90,000, will be recognized as revenue only in 2025. So the 30,000, all right, will be recognized in 2024, and the left, all right, this is revenue, and the remaining 90,000 will be recognized in 2024 as deferred revenue. All right, they are deferred. We cannot recognize them in 2024, we will be able to recognize them in 2025. So it means that we won't be able to recognize the whole transaction, right? And this is something that the accountants typically do at the end of the year. They go over each and every client, all the open contracts, and they see any contract that extends to 2025. They will need to calculate what they can recognize in 2024, and the rest goes to deferred revenue. So let's take an example from Google um, financial statements. So this is the consolidated balance sheet of the parent company of Google. So for 2023, we have under liability, all right, because it's a liability for us because we still need to provide the service in 2024 or 2025 for this client that basically paid us in advance, all right? So it's a liability for us to provide the service. So this is why it appears under liabilities. And here the deferred revenue, sorry, here, right under current liabilities. So this is what we will need to provide services for in the next 12 months from the closing date of the report. So for 2023, just over $4 billion in deferred revenue. So basically, Alphabet was not able to recognize $4 billion in revenue, although they got this money from clients, but they will be able to recognize it in 2024, right? Because this year is 2023. And with Meta, which is Facebook. So for some reason, the deferred revenue does not appear in the main balance sheet report, but rather in a comment here. And the deferred revenue for the end of the year 2022 was a little bit over $500 million. So you see there is a big difference between Google and Facebook. I guess Facebook sells, or charge for advertising pretty quickly. They do not sell, packages, I believe, a lot of packages for the next 12 months, at least not for the majority of their clients. So this is why we see a relatively low number compared to Google. And yeah, this is it. This is the explanation of what deferred revenue is, how it impacts your top line. You cannot recognize the whole deal. And we just saw an example with Google and Facebook, or Meta in their financial statements. Bear in mind that you will see the deferred revenue on the balance sheet report. All right. I hope it helps, and I'll see you on the next video.